Yeah, look, that's a name where classic COVID beneficiary, right? They service freelance sellers to go find customers, and the perfect job to kind of do if you're working from home. At one point, that stock was trading at over 25 times forward sales. Now it's 12. So the question is, where's the bottom? Or another way to think about this is a company that has 4 million customers, and if you look at who's a good representation of small businesses. Look at the GoDaddies, the Wixes, the Squarespace, right? Who's got their websites. There's something like 40 million paying customers there. So they basically have a 10% penetration of the market. So right now, for example, that's a stock that we think should be bought on the weakness.
So you actually see the best opportunity in Fiverr and in Roku right now. Is that right?
Again, if you're putting, again, they're mid cap, not large cap. We can talk large cap, but within our universe right now, yes, we're looking at companies that when they were at highs, you had to really kind of price in your most optimistic outlook. So for Roku, you had to start to give them credit for what they could do internationally. And unlike in the US, where they really did benefit by a first mover advantage and have a dominant position, and we should get an update this week as far as their fight they're having with Google about YouTube.
Yeah.
But they may not be successful internationally, right? Like, we don't know. But when the stock was at the highs, you needed to assume that to still be a bull on the stock. At this point, if they're just kind of a second or third player internationally, that's just fine. We think you can make money in the stock.
It's a good explanation of how the price decline kind of changes what needs to go right for the stock to work. All right, so in large cap, you like Snap and Uber. But let me ask you, finally, before we go here, about your mega cap pick, which is Meta or Facebook. Why is that? And speaking of catalysts, what are the positive catalysts for this name over the next, say, 6 to 12 months?
Sure. So first of all, I think most people now realize the concerns about supply chain were not as bad as thought. And so that probably means the overall macro advertising environment will be, probably in line or better than expected in the fourth quarter. I think there were a number of industry forecasts that came out today at a competitor conference and will be reported over the next 24 hours. That'd be point number one. Point number two, all this focus on, targeting customers. Facebook still sits or Meta, got used to saying that, still sits on the best set of data, and their advertisers know what to do with it. And so while other companies are building data sets, Facebook Meta still has the best first party data. And I guess lastly, I'd leave you with, we're looking for them to spend about $11 billion next year on kind of Meta and all, AR, VR, et cetera. If you kind of don't penalize them for that investment, so in other words, don't give them credit, but don't penalize them, the stock is trading at about 11 times kind of forward EBITDA, which, is kind of at the low end. And you've got, meanwhile, Google even adjusting for some of their underperforming assets, more like at 15.5. So you've got the stock at one of the widest valuation gaps versus Alphabet. And we think that Alphabet will go back to losing share once kind of the economy is fully reopened.
Very interesting. So many different levers there.